Hi, and welcome back to Will We Make It? It's Cosmo here. We're going to talk about the start of the week, what we did from the previous week, and where we're at for today, and what we look forward to in the future. So stay tuned, and let's hit it. Of course, let me remind you, I am not a financial advisor. This is not financial advice. This video is for entertainment purposes and educational purposes only. Invest at your own risk. This is what I'm doing. You do not need to do what I do. All right, now let's get with it. All right, welcome back to the channel dedicated to finance and future. I'm your host, Cosmo, and we'll get right into it, shall we? I want to go over my stash portfolio real quick. If we can go ahead and pull that up, see what we got here. Right here, let me go ahead. Just real quickly, just want to go ahead and show I did put in $5 last week in the following stocks. As you can see, they've been down. They've been down for a little while. But I'm looking forward to the future. And basically what it boils down to, if you put in, go here to my NVIDIA right here. If you can see the amount that I invested, $81 so far. And that's just by putting $5 every 2 weeks. If you go down here, my average price, this is my average price, $244.31. Now basically what that means is the money that I put in, I've paid at that price. However, if I continue to put $5 in, as you can see, the current price right now is $221. So if I were to put $5 in right now, I would have bought at $221. It would actually average my price down a little bit. Not significantly, because I already have $81 invested, but it would still average it down just a little bit. And by keep averaging in every 2 weeks or every week or however you want to do it or however you can afford, you actually bring your average down to the best possible price. So that's the point of dollar cost averaging. That's why I do it. It basically will really benefit you when the economy is taking a downturn. Overall, as you can see with NVIDIA, let's go over here to Google Finance. If you actually see, it's up right now for the day, which is, oh no, excuse me, it's down for the day. It's down 3.5%. But if you go ahead to the 5-day, if you actually take a look for the last week, it's been up. Last week it was up 0.19%, but it is going down. A lot of that has to do with, the war in Ukraine, the chip makers. There's a lot of issue going on with that. And one thing I did not know, which I thought was very interesting, Ukraine is actually one of 2 companies that create over 50% of the neon lasers used to create the stock chips. So guess what? They're shut down. So with that being said, we might have some real issues as far as the tech world when it comes to semiconductors, chip makers, different things like that. So that's something definitely to take into consideration. And actually, I found out that Ford is actually going to be, and I'll see if I can pull it up here. Ford is actually going to be selling Ford Explorers without rear climate control chips because they don't have the chips to put them in. So you're actually, a lot of the newer Explorers that are going to be coming out aren't even going to work. They're rear climate control devices for the rear seats, however that works. I don't own a Ford. I don't own an SUV. I don't even own a vehicle, so which is probably good. It's probably saving me a lot of money on gas right now, basically. But yeah, so due to the chip shortage over in Ukraine, Ford is going to be issuing out Ford Explorers without functioning climate control. So yeah, that's definitely an issue. So yeah, that's pretty wild. Another thing I want to talk about is some upcoming things that are coming up in the market involving Google and Amazon. Yes, Google and Amazon, the two big tech companies, are issuing a 20-to-1 stock split. So if you own shares in Amazon, which I do not own shares in Google, but I will be, because I'm going to take advantage of the quick spike that's going to happen right before this stock split. History shows that stocks generally spike between 3 to 5% when they go through a stock split. So what I'm going to do is I'm going to dollar cost average in on my Amazon. I'm a dollar cost average in on some Google, and I'm going to, let me pull it up here. See, I'm missing my Amazon, so I'm going to go ahead and start adding a little bit more of my Amazon. It's actually going to it's going to split on June 3rd, I believe the day is 20-to-1 split. So if you own one share of Amazon stock, you will own 20 shares. Now, of course, they're going to be worth the same. It's in an effort to drive the price down to make it more more receptive to new buyers, more receptive to people selling options, different things like that. Because with the price being so high right now, a lot of people don't have the money to go ahead and buy a whole share. So they want to do a stock split in the efforts to help bring on new investors. Also, Google, they are doing their stock split. They're going to be doing their stock split, I believe, in July 3rd. They're going to be doing their stock 20-to-1 stock split. So that's what I'm doing. I'm poised for the future. I'm going to go ahead and dollar cost average in on Amazon. I'm going to dollar cost average on Google. I'm going to keep adding just $5, $10, a little bit of money here and there, once a week, twice a week, just so I can build up that momentum going into that split. And then once that split happens and it starts to take a downturn, I'm out the door. I'm going to go ahead and sell my profits. I might keep a little bit around just to see how it goes. But I'm basically going to try and take advantage of that split. Another stock I'm going to be talking about is SoFi. I actually own a little bit of SoFi, the finance company. You've probably seen the commercials or some of the ads for student loans and different things like that on the web or Facebook or whatever. They've actually just signed a new contract with a major banking firm. So they are basically going to be expanding. If you take a look, they've been dropping down dramatically in the last 5 days, even the last month. I actually bought in when it was a lot higher than this. I actually bought in when it was like $20 a share. So I've definitely lost significant, but I'm a strong believer that they're going to turn it around, and especially at this price, $7.85 a share is a steal in my opinion. So I'm going to go ahead and dollar cost average there as well. Another stock I'm going to mention is Coulter Energy. It's an oil company based out in Houston, Texas. Right now, it's trading. It has dropped significantly, and it's a steal right now. But if you take a look at the month, just a month ago, right here, it was up. If you take a look right here, let's see, pull it up. It was up 19% since February. So it's come down right now. I'm expecting it to go back up, so I'm dollar cost averaging in there as well. 23.12 is a steal for me. I think the oil companies are going to be making bank here soon. I have a strong feeling that they're going to start investing in oil production, which is going to lead to more sales, which is going to lead more profit. Everybody knows oil companies are making profit. Why not take a piece of that profit for yourself? So I'm going ahead to invest a dollar cost average in there, $5, $10, every 2 weeks, every pay period. Nothing much, That way I'm not investing all my eggs in one basket. But it's good to diversify your funds. You don't want to be solely invested in tech stocks. You don't want to be solely invested in energy stocks. You don't want to be solely invested in banking stocks, because look what happened when the banking collapsed 2008. They had needed the government to bail them out. So that's basically what I'm going in as far as stocks go. There's a couple other things I want to talk about. Briefly touch on crypto a little bit. I'm going to be doing a video. I ran into a couple people who have told me that they're not too familiar with crypto and they're a little kind of uneasy on it. So I'm going to make a video going explaining crypto in the easiest terms possible. No technical jargon, no mumbo jumbo, no information that's just gonna go over your head. I'm just gonna explain it real simple in plain terms that everybody can understand, that even your grandpappy will know. So I'm gonna go over that in a future video, but for right now, I will talk about a couple crypto investments I'm in through Gemini. If you're interested in Gemini, leave a link down below. Get started with crypto. You can get $10 if you trade $100 or more, $10 of Bitcoin. But I think crypto is the future. I'm definitely putting more of a hedge on crypto than I am on regular growth stocks, just because I personally feel that crypto is going to be the future, and it has the possibility of a much more income potential at a such shorter time. So that's basically what I'm going to be doing. Is I'm going to be going ahead and putting in some money into crypto. I already have a couple portfolios in Gemini, in Coinbase, BlockFi. I have some crypto in Webull and Robinhood as well. But my main is Gemini, just because they have the sandbox and they have the metaverse coins, sandbox, and mana. So basically going over, let me just pull it up real quick. Little setup here, as you can see. Just going down the top, and some of the ones that I'm following right now. Like I said, I'm following the Decentraland. The crypto is just kind of up and down, really. It is just really basically the same as the market. I mean, if you take a look at the Dow and you go back to the last week, it is just up and down. So crypto definitely follows the market a lot, but I do think there's more earning potential when it comes to crypto. They're just, the potential of making money is huge in my opinion. As long as you dollar cost average in these rough times, you're always going to come out ahead. So right now, Ethereum right now is what I'm looking at, because they're coming out with new Ethereum 2.0, which is basically going to proof of stake and basically allow for cheaper gas fees. If you don't know what that is, don't worry, I'll go over it in another video. But basically, if you want to purchase something with Ethereum, or if you want to buy NFT is basically a digital picture that's real popular now. You have to pay a gas fee. So just like gas in the real world, it is freaking expensive. The average price is like $100 to $350 just for the gas fees, and then you have to purchase the NFT with it. So it's insane. But with Ethereum 2.0, that is going to drastically change. So I have a feeling that Ethereum is really going to jump when Ethereum 2.0 comes out. A couple other ones I'm looking at, of course, Decentraland. Decentraland's been down. I think the price right now is insane. I actually bought it when it was $3, so I'm actually losing more than this. But like I said, by dollar cost averaging, I will bring my price down to a better average, and then when it begins to climb, I will reap those benefits. Sandbox is another metaverse game. The Snoop Dogg tie-in, which is basically Snoop Dogg purchased land in the Sandbox universe. You can actually go to, if you click on the Sandbox, you can go to, you can actually go to the game and see what it's like. I believe it's free. I have never been in the game, but there's a link to it right here, where you can go ahead and take a look at the game. Another one that I'm looking at is Dogeland Mars. Now, Dogeland Mars is right now is just, I'm just basically looking at it as a meme coin. I'm basically putting money in this to throw it away, really. I mean, I'm basically shooting on a whim and a prayer that this is going to jump up. I know it's never going to reach to a 1 cent potential. That's not going to be possible. I am hoping that it loses a couple zeros where I can gain, a couple thousands percents. I mean, it is possible, and if not, then hey, I've only lost maybe $10, $20, $30. It doesn't cost much to get a ton of Doge on Mars coins. It's available on Gemini. You can get Doge on Mars for, $10 will get you 6 million coins. So, $10 goes a long way when it's this cheap. But yeah, it's just a shot in the dark just to see if something comes up out of it. I did look at their white paper, and I haven't seen anything updated recently, so that's probably why it hasn't really grown much, because they haven't had much updates. But the holders, last time I checked, the amount of people that have it, as you can see, it went down dramatically right here, and then it's gone back up. So as long as it continues to go up, that means there's still interest in it, in my opinion. So this is a good way to check to see what the interest is on how many people are interested in the coin. If the holders keep growing, and again, if you're getting people are selling off and getting out, you'll see something like this. But CoinMarketCap.com is a great way to check into cryptocurrencies. You can check out their white paper, their website, where you can purchase it at. So it's a great website to check out if you're interested in cryptocurrency. And again, I'll go over crypto in my next video for those that are unfamiliar. But right now, with the way the economy is, I'm not expecting, a lot of people are talking about, are we going to reach the bottom? Is the bottom coming? The Fed, they are meeting tomorrow, I believe. Yeah, the 15th through the 17th, I believe. Let me check my notes. Yeah, 15th and the 16th, the Fed will meet, and they will most likely raise interest rates. That's going to put a downward pressure on the market. So the market is going to continue to go down, and it may go down for a little while. Do I think we reached the bottom? To me, I don't think we have. I think we still have a little way to go, but it's a good time to get in, because will the market recover? Yes, it absolutely will. I want to show you one other thing real quick. We can go back, let's go back to the market here, and let's go back to the NASDAQ, and let's go to the 5-year here. Let's see how this trend is, always going up, even through dark times right here. This is the COVID pandemic area right here. See how the market dropped, and look how it came back and returned. We're in one of these dropping phases right now. This one here, and if you go even further back, you can go to the .com bust right here. Here's the .com bust. You notice it came back and then gradually came all the way back up, and huge growth opportunity here. And even after the COVID pandemic, there it is right there, coming right back up. So as you can see, the U.S. economy is strong. I think it'll recover nicely. Like I said, I don't think we're out of the woods yet. I think we still got a little ways to go. But I think eventually we'll get out of it, and we have an opportunity to make a good amount of money. Just keep dollar cost averaging. That's what I'm going to do. Keep dollar cost averaging in, and you will be fine. You will get through these humps in the road, and you will see 2 years, 3 years, 5 years down the road, you might be sitting pretty. So that's all I got for today. Look for another video on cryptocurrency will be coming out shortly. I'm also going to be talking about a couple other hustle ideas of ways to make some extra cash online. So if you're interested in that, make sure you hit a like and subscribe, and I'll see you next time. Peace.